Okay, let's dive right into this explainer and uncover the thrilling 400-year-old story of how the world's first stock market was born out of absolute life or death peril. Every single day, we see literally trillions of dollars moving seamlessly through global markets and millions of people investing to build their personal wealth. But, very few people actually know where this incredible system all began. Spoiler alert, it wasn't invented in the towering skyscrapers of Wall Street, and it wasn't born in the banking halls of London. It actually started in a small European country driven by a desperate need to solve a massive, real-world problem. To truly appreciate how wild this is, I want you to imagine a world completely devoid of stock markets and investors. It really begs the question, how on earth would any business ever get the cash to grow? Think about it for a second. If you have a brilliant idea today that requires millions of dollars in factories or research, you just go to the capital markets, right? You pitch to investors, they hand you money in exchange for a piece of your future success, and you're off. But what if that mechanism simply did not exist? How would any big innovation ever get funded? Well, without capital markets, the massive billion-dollar companies that completely define our modern world simply wouldn't exist. There'd be no Apple, no Amazon, no Tesla, no Google. These are massive entities that have entirely reshaped how we communicate, how we shop, how we travel, basically how we live. But their monumental growth required colossal amounts of cash upfront, capital that absolutely no single person or standard bank could provide on their own. Without a system to pool money from thousands or even millions of willing investors, the modern technological landscape we completely take for granted today, it would be impossible.
Section 1. The Ultimate Maritime Risk. High Seas, High Stakes.
To find out who actually invented the idea of buying a tiny piece of a company, we've got to travel way back to the perilous oceans of the 1500s. Back then, ocean voyages were astronomically expensive and incredibly dangerous, meaning a single sunken ship could instantly wipe out a merchant's entire fortune. If you were a wealthy merchant trying to import highly valuable goods from Asia, you had to fund the entire ship, the crew, and all the supplies out of your own pocket. And these ships faced unrelenting threats. We're talking violent pirates, massive storms, rampant disease among the crew, severe navigation errors. If your ship went down, your entire investment disappeared in the blink of an eye. It was an all-or-nothing gamble that could ruin a wealthy family for generations. Section 2. Birth of the Share, a revolutionary solution. Because literally no single merchant wanted to bear that insane life or death risk alone, a brilliant, world-changing solution was born in 1602. The Dutch government stepped in and created one unified company, the Dutch East India Company, widely known by its Dutch initials, the VOC. Its main mission was to sail to Asia and trade for highly prized goods like spices, silk, tea, and coffee. But instead of relying on one ultra-wealthy backer or a king to finance the voyage, they did something completely unprecedented. They opened the doors to the public. They invited thousands of ordinary citizens to contribute whatever money they could to help fund these massive voyages. And by inventing what we now call shares, anyone from craftsmen and local bankers to widows and everyday families could own a tiny piece of a global company without ever risking their own lives at sea. In return for their cash, the VOC handed them paper ownership certificates. If the company's ships actually returned safely and sold their spices for a massive profit, the investors shared in those exact profits. If the business expanded, the value of their investment went up. For the very first time in human history, and this is huge, you didn't have to be royalty or a rugged sailor to benefit from booming international trade. You just had to be an owner. So here's where it gets really fascinating. Investors soon realized they wanted to buy and sell these shares before the ships even returned, which organically created the world's first modern stock exchange, where people gathered daily. I mean, think about the logistics for a second. A voyage could take years. If you suddenly needed your money back to, say, fix your roof or buy a house, you couldn't exactly wait around for a ship to maybe show up 3 years later. So buyers and sellers just started meeting up on the street to trade these paper certificates. They negotiated prices, they speculated on which ships might return, and they swapped ownership. Without anyone officially planning it, the Amsterdam Stock Exchange was naturally born. Section 3. The First Market Bubble, when greed takes over. But of course, just as the system started working perfectly, human psychology kicked in, proving that where money flows, speculation quickly follows. Investors pretty quickly stopped caring about the actual business operations and started blindly buying shares just because the prices were skyrocketing. Originally, everybody was focused on business fundamentals, right? Real profits from physical trade, steady growth. But suddenly, the trading itself became the product. People actually started borrowing money just to buy shares. Wild rumors spread like wildfire through the trading crowds. The prices of the shares became completely wildly disconnected from the actual value of the tea and spices the ships were supposedly bringing back. This intense disconnect from reality caused history's very first speculative market bubble, serving as a harsh reminder of a timeless investing truth. Markets reward patience, but punish greed. When that bubble inevitably burst, those who had borrowed heavily to speculate on rumors lost absolutely everything, exactly like those earlier merchants whose ships used to sink in the storms. It proved that while the structure of finance had drastically evolved, human nature absolutely had not.
Section 4. Spreading across the globe. The idea goes viral.
Despite the painful reality check of that early bubble bursting, the brilliant core concept of capital markets survived, and it rapidly spread. This was simply an idea too powerful to be contained to just one city. The Dutch model was so incredibly effective at raising capital that stock exchanges began popping up everywhere, in London, Paris, and Berlin. Governments and businesses quickly realized that pooling public money was the ultimate way to scale up. The innovation moved from those terrifying, dangerous voyages of the 1500s to the founding of the VOC in 1602, ultimately crossing the Atlantic and arriving in the United States by the late 1700s. What started in Amsterdam was steadily becoming a true global financial system. Picture this, it's 1792, and exactly 24 stockbrokers gather under a buttonwood tree on Wall Street. They sign an agreement that effectively lays the foundation for the massive New York Stock Exchange. This is the famous Buttonwood Agreement. It was honestly just a simple, localized agreement among a small group of traders to organize their securities market, but from that tiny seed planted by just 24 men, the NYSE grew into one of the largest and most powerful financial markets in the entire world today. By solving those two massive problems, raising capital for businesses and building personal wealth for investors, this original Dutch innovation went on to fund practically every major technological leap in modern history. We're talking railroads that connected entire continents, automobiles that transformed our cities, computers, the internet, and right now, artificial intelligence. All of these monumental leaps forward benefited directly from everyday investors who were willing to provide their hard-earned capital in exchange for a tiny piece of ownership.
Section 5. 5 lessons for today. The legacy of the first stock market.
Let's distill this 400-year history into a few actionable insights that we can actually apply to our own wealth-building journeys today. First, great ideas usually begin just by trying to solve a very practical problem, like, stopping merchants from going bankrupt when a ship sinks. Second, sharing risk encourages massive innovation. When the downside is spread out, humans are way more willing to take the bold leaps necessary to change the world. Third, ownership is the absolute key to creating wealth over time. You don't just want to work for a wage, you want your capital working for you. Fourth, as we saw with that first bubble, markets vastly reward long-term investing over short-term speculation based on hype. And finally, financial innovation has the power to elevate civilization, but responsible, level-headed investing remains absolutely essential to actually keeping that wealth. I really want you to remember that every single time you buy a fraction of a share on an investing app today, you are participating in the exact same wealth-building system built by those 17th century Dutch merchants. Whether you're tapping a screen on your smartphone or clicking a mouse, you're stepping into a rich historical tradition that completely democratized wealth. It literally took the power of business ownership away from just kings and the ultra-wealthy and handed it directly to ordinary people. It is arguably one of the greatest wealth-building systems ever devised in human history. As you reflect on the sheer power of modern capitalism, I want to leave you with this final thought. As financial systems continue to evolve, what unimaginable future will our collective investments fund next? If pooling our resources could fund the crossing of dangerous oceans, the laying of continental railroads, and the birth of the internet, the possibilities for tomorrow are completely limitless. Thank you so much for joining me for this explainer. I really hope this deep dive into the birth of modern finance sparked your curiosity and changed how you look at the stock market. Keep learning, keep investing, and I'll catch you in the next one.